Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin, the beauty of mathematics, part 25. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the Telegram channel, which you can find a link to in the description below. Let's go ahead and jump in. Now, on the first of every month, we like to take a look back at where we stand in terms of our Bitcoin, the Beauty of Mathematics series. I should remind you that while the video title says Bitcoin, it actually is of the entire cryptocurrency asset class. And in general, this is what we ultimately look at, right? And the idea of this chart is to tell us how much we are overvalued or undervalued with respect to the fair value logarithmic regression trend line, which, as we always know, is theoretically a monotonically increasing function. And the idea behind that is, in general, there's more and more people adopting cryptocurrency as the years press on, and it's just filled with various boom and bust cycles where sometimes the price goes way above what it realistically should to support the adoption level does not support, and then other times it goes well below where it should be based on where the adoption level is. And so right now, as of July 1st, 2022, the total cryptocurrency market capitalization is coming in at a very modest 869 billion, with the fair value logarithmic regression trend line saying that it's currently fairly valued at about 1.73 trillion. Now, this represents an approximate undervaluation by about 50%, okay? Now, if you joined this channel or you subscribed to this channel in late 2020 or anytime in 2021 or even in early 2022, you are probably quite familiar with this trend line or with the asset class being technically considered overvalued. And I occasionally saw some comments, saying that we shouldn't consider it overvalued with respect to everyone, all these institutions and whatnot. But at the end of the day, we have to stick with the math and say, you know what? We go through periods of overvaluation. We go through periods of undervaluation. And if history is any indication, then those that stick with crypto through the undervaluation phase are the ones that tend to come out much better later on in the bull market. Okay, there's sort of two types of people in crypto, right? Like there's the type of person that's going to stick around through the bear market and we'll sort of see it through. They'll be there for the growing pains. They'll be there to watch, so many things sort of come and go through the cycles. And they're there every step of the way. But then you also have the people that only come once we're in a bubble. Or perhaps, better put, they come once we are in the overvaluation territory. You can see that crypto technically went overvalued based on this chart in late 2020, early 2021. I have to imagine that's when a lot of people really first started to get into crypto. How many people can say they were the ones buying, how many people can say they were the ones that were in this phase over here? It always looks easy in hindsight, right? It always looks really easy in hindsight to say, yeah, like these people were lucky. But the thing is, right, this is the thing. This phase here that we're currently in is the beginning of this phase in late 2018 and early 2019, right? It's the beginning of this phase that we saw back in 2015 as well. It's the beginning of where we saw in late 2011 and 2012. It's the beginning of the phase that you likely point towards many years from now and say you wish you had stuck it out. Now, I'm not going to sit here and pretend that everything is always going to play out in the exact same way. We know that it won't, right? We know that it won't. And all we can realistically do is to remember that while all models are useful, right, they're all wrong, right? Some models are useful, but they're all wrong at the end of the day. And I think the actual saying goes, all models are wrong, some are useful. So I want you to remember that in the grand scheme of where we are right now, the asset class as a whole has at least in the past, it has ultimately made its way to the lower green regression line that you can see. Now, sometimes it just tends to go down towards a certain point, and then we go sideways until we hit it. That happened the last two cycles, right? We go down to a certain point, and then we go sideways until we hit it. Could we be getting close to that sideways area? It's possible, but I will remind you, investing and not only in crypto, but in any market, You always have to take account of everything that's going on in the world as well. Okay, we know the macro isn't quite as great as it is right now, but despite that, right, despite how bad the macro is, we're still not as undervalued as we historically have been at the, before we actually get into a bull market. Now, again, right now we're sitting at around 50% undervalued. And that might sound pretty good. And in the grand scheme of things, it probably is. If you were to fast forward 5 to 10 years, I imagine the idea of the entire crypto asset class being valued for less than $1 trillion would actually seem quite comical. And us sort of wondering how many hundreds of billions could it go down or up or oscillate over the next year or two will be somewhat laughable. But it can make a big difference in the short term, and I know it's not easy on people watching these crypto markets and seeing how volatile they are, especially over the last 6 months to the downside. Now, with all that said, we know that we've seen these major peaks in the past. We've seen some more stifled peaks. We got a couple of those this cycle, and really the Fed pivoted in a few months ago. And ever since then, the market has been in a downtrend, and risk assets have in general been in a downtrend. Not only cryptocurrency, you can also look at the stock market. The S&P is down 25% or so from its all-time high, and so on and so forth. So we need to remember, right, that don't fight the Fed. It simply does not make sense to fight the Fed. And when they turn the money printers on, it's typically risk on. When they turn the money printers off, it's risk off. When they're raising interest rates into a slowing economy, right, it's risk off. Now, when we think about things, we also have to imagine what's going to come next. What is the future going to bring? We look at this chart. Despite all this short-term TA that goes on crypto Twitter and crypto YouTube, this chart right here shows all of Bitcoin's price history that we realistically have access to, going all the way back to 2010. And one of the things that you'll recognize here is that in the grand scheme of things, 2024 is not that far away, okay, in the grand scheme. Now, I know right now it seems like a long way off, okay? You're talking about 18 months, but that's where the next Bitcoin halving is. And then it sort of begs the question, well, is 18 months enough time for the Fed to get inflation under control and to pivot back the other way? And I think it could be. I think it could be. If history is an indication, we've seen plenty of times where inflation was out of control. And over the span of the next 1 to 2 years, it started to come back down. And during those years, the stock market started to go back up. So it is worthwhile to consider that whatever comes between, say, now and the next 18 months, for Bitcoin especially, will likely be a rather attractive accumulation phase. There are, of course, some indicators that suggest we could go lower than the current prices, even ones like this that point towards historical levels of undervaluation. Now, if you take the percent difference between the total cryptocurrency market capitalization, which again is the white line on this chart, and the fair value logarithmic regression trend line, which is the red line, you get a chart that looks like this. And one of the things we've noted before is that we tend to come back down to this undervaluation territory. And historic bottoms occur when it tends to be about 65 to 70% undervalued. Now, one thing I will remind you, this chart is not just of Bitcoin. It's of the entire asset class. Okay, so this chart could go down in two separate ways. Not just one, but two separate ways. One way is for the entire, for cryptocurrency to lose value, right? I mean, if crypto loses value, we know that it would become more undervalued with respect to the fair value, okay? Now, something to consider within that, a subset of that is, if the altcoin market were to go down, this is going to go down even if Bitcoin doesn't, okay? So not all cryptocurrencies have to go down for the entire, for this trend line to go, or for this line to get back down to, say, 65 to 70% undervalued. But there's actually another more subtle way for this trend line to ultimately get undervalued. And if you don't know what I'm talking about, one thing to really hone in on here is we know that in late 2021, the entire asset class went to approximately 3 trillion, which was higher than it made it in earlier 2021. However, this peak here is lower than this peak. Why is that? Right? Why would it be lower if the entire asset class was more valued? Right? It was higher value. It was at 3 trillion. Remember, the red line monotonically increases. So while technically speaking, where we went in late November was higher than in late 2021 in November was higher than where we went back in April and May of 2021. The extension from the fair value wasn't quite as much. Therefore, we ended up seeing an overvaluation that wasn't quite as spectacular. Okay. Therefore, one other way for this to go down is simply if we go sideways into the green line. You can see something like that happen in 2018 as well, where we hit a bottom and then ultimately we went sideways into the green line. And despite the fact that the market capitalization was lower in late 2018, the actual major undervaluation part that led to the bull run occurred in early 2020 at a slightly higher market capitalization than where it was at the actual market cycle bottom. Okay, so that is something subtle to consider. With all that said, I mean, I'm not gonna say that we have to go sideways for the next year. I'm not gonna say that, but you can see that we're coming into that sort of accumulation zone where we just start to go sideways for a while and gear up for a future bull market. Okay. Now again, when looking back at history, we can see that we tend to be in this phase for quite a long period of time. I mean, we entered it over here in early 2015, late 2014, and we were in it for a couple of years before going back up. So I think what we're looking at right now, realistically, is we just want to find a bottom, and then once we find that bottom, we'll likely need to go sideways for a while, and then once we do that, then we can hopefully support another bull market once the Fed is pivoted, once maybe they're even lowering interest rates at that time, and inflation's coming back down under control. So again, if you look at the whole picture, you can see that as we come into this undervaluation phase, this is where more long-term value investors are going to find more interesting deals than they really ever would have found in 2021 when everything was just always overvalued. Now that things are undervalued, it might be painful, but remember, things can remain undervalued for a couple of years before we go back up to the upside. So it is something to consider as we continue to navigate the cryptoverse. And if we do go sideways from this point, which is actually happens to be around the prior all-time high of the total market cap, then it would take until about mid-2023 to reach this on the lower green regression line. If we go straight down to the green band, it would mean the entire asset class going down to a market capitalization of approximately, around 500 billion, which is coincidentally about the same percentage drop that the dot-com bubble saw, the NASDAQ, back in the year 2000 for the next year or two. And then, of course, we always talk about our elusive $10 trillion goal of the entire asset class. And, ultimately it is going to take another sustained bull market to get us there. Could we have some bunny hill bull markets before we get to 10 trillion? Almost certainly. We had we had this one in 2019. We've had these things in the past, but ultimately you can see that the $10 trillion mark, as we continue to wait and allow the asset class to mature, eventually the fair value of the asset class will be approaching 10 trillion, and maybe the fair value of the asset class will be hitting 10 trillion within the next 4 years or so, maybe by 2026. I mean, you can see as you get into early 2025, it still hasn't quite hit it yet, that $10 trillion valuation. So I do think it's going to take us a few more years to get there. And hopefully we will in fact see that next bull market by crypto get us to the elusive $10 trillion market capitalization, plus or minus a few trillion. As we always say, as we go to sleep at night, we cannot help but wonder, what's a few $1 trillion among friends? Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up. You can also check out Into the Cryptoverse Premium at intothecryptoverse.com. We have the sale going on right now, and you'll get access to a whole lot of charts, including this one if you want to see this one updated. But regardless, make sure you subscribe if you're not subscribed. I'll see you next time. Bye.